Nvidia just disclosed a big bet on a certain ultra small cap, and the stock is going absolutely parabolic. The company is ticker symbol SERV, Serve Robotics, and it's an autonomous delivery company utilizing AI to take deliveries to the next level. And today it closed at a nice breather from its uptrend, so now is the perfect time for me to discuss it with you because I believe this is going to get bought up and move much higher in the days ahead. And there is something very, very fascinating going on here beneath the scenes. And in today's video, I'm going to break down exactly what this small cap is, its growth potential, revenue trajectory, the massive advantage for Nvidia in buying this, and why I believe you may want to look into it as soon as possible, and specifically before Nvidia reports their own earnings at the end of next month. And if you appreciate videos like this, the only thing I ask in return is that you hit that ravishing like button, and also don't forget to subscribe. A very, very low amount of folks that watch our videos are actually subscribed to the channel, but I hear the doctors say that the best prescription is a subscription. And as always, if you're the one taking the risk, you got to be the one doing the ultimate frisk. Make sure to do your own due diligence on all ideas presented here on the channel. Okay, so Nvidia just disclosed a multi-million-dollar stake in microcap stock Serve Robotics. And if you look at Serve's 13G filings, it shows Nvidia has 3.727 million sold voting power shares, which equates to roughly 10% of total shares outstanding, making Nvidia a key owner and a key partner. Now, we've covered other small cap stocks that Nvidia took stakes in earlier this year. The stocks tend to have several week to month rallies after disclosures, but more importantly, they tend to have relentless coverage in the financial media and attention paid to them, and that helps provide a very, very easy environment for raising capital and otherwise succeeding. And those stocks tend to continue to outperform their counterparts. So in many ways, Nvidia is the king, but it's also the king maker. And in total, Nvidia now has more than $12 million invested into this particular robotics company. Okay, so great. But what exactly is this company? What exactly is it? What does it do? Is it worth a buy? Well, Serve Robotics is a major player in the autonomous delivery industry and one of the only ones that's showing massive proof of concept. They are focusing on developing and deploying sidewalk delivery robots. I've actually seen a ton of these driving around on the sidewalks, especially when I'm in LA. They are super, super common. But overall, I mean, automated delivery is a very, very useful concept. It's economically and environmentally pretty damn stupid that you order a 1-pound burrito from Chipotle and a 2-ton car comes to pick it up and transports it to you. Of course, the transportation of the burrito on the other side after you eat it is not fun either. But when it's being delivered to you, there's a lot of wasted expense there, and that's not even including the human driver's time and risk of accident and increased traffic on the roads and so on and so forth. So this company is essentially trying to target a potentially $450 billion robotic and eventually drone delivery market. And Serve Robotics already has established pretty high profile clients, obviously Uber Eats, but also Postmates and many other local restaurants and retailers. These collaborations are enabling Serve Robotics to integrate pretty seamlessly into existing delivery infrastructures, enhancing service efficiency and hopefully customer satisfaction. In terms of proof of concept, the company's robots have already completed thousands of deliveries, proving their reliability and effectiveness in real-world scenarios. If you look at their release data, they've already done some 50,000 deliveries in the LA market, and reliability, they say, is about 99.94%. That's a delivery completion that is 10x better than drivers. Now, how exactly do they make money? Well, there's a few different ways they make moolah. Serve Robotics charges fees for each delivery completed by its robots. These fees can vary, of course, based on distance, delivery time, and specific requirements of the delivery, similar to how regular Uber and DoorDash and so on and so forth deliveries work. They also have partnership agreements with restaurants, retailers, and delivery platforms. These often include long-term contracts where Serve Robotics provides its delivery services in exchange for a fixed fee or a percentage of the delivery revenue. They also have subscription services and licensing options and so on and so forth. And obviously, you could see how robots are and will increasingly become way cheaper than paying for human delivery drivers. And so it's not hard to find companies willing to pay these fees. Even if you can offer them a 10 to 20% reduction in cost, I'm sure they'd take that in a heartbeat. But potentially, especially in some markets like California, this could save 50, 60, 70%. And they're in the beginning of rolling out a 2,000 robot deployment for a contract that they've signed with Uber Eats. And that should get a lot of coverage as well. But the one thing that I've always wondered about is how long would it take for these to deliver? It seems like a little robot sidewalk strolling and dodging pedestrians is not the fastest way to deliver something. Well, obviously this is something that gets better over time, but as of right now, the robot travels up to 7 miles per hour on the sidewalk and has a delivery range of about a mile, which means customers usually receive their items within 30 minutes. Now that's not bad at all, and obviously it wouldn't work in every neighborhood, but in many that are within a mile of restaurants or grocery stores, it could work pretty well. Okay, but Charlie, all of this sounds interesting, but is it super duper exciting, life-changing on the surface? I'd say probably not. My first thought when I was looking at this is, why would Nvidia buy this? I mean, not just Nvidia, but it also has the backing of Uber, 7-Eleven, and others. Obviously, Uber and 7-Eleven have direct real-world applications for this because they want deliveries cheaper. But is this model really that game-changing? I mean, does it make sense for Nvidia? Sure, I could see this scaling up and being a big thing one day, but are you really going to get to a point where you have thousands of these little delivery robots driving on the streets and tripping people over all day? It seems at least a supplement to regular delivery by cars at best. And sure, I think if you put this in every 1 mile city radius in the US, it could make a decent chunk of moolah. But I don't think that's what this is about. I don't think that's the bigger picture here. I believe this is just the beginning training phase, and Nvidia is into this stock. They are in this stock for the future potential of full AI delivery through various other types of transportation robots. If you look at the market size estimates, they are saying this is supposed to be a $450 billion a year untapped market by 2030. Drone delivery isn't here yet because there's a ton of regulatory approvals ahead, and autonomous car delivery, same thing. So the first stage right now are these little robots, and considering that 2.5 miles is the median distance of food deliveries in the US, it's pretty clear that if Serve can expand their 1 mile radius to 2.5, that they're going to be able to attack most markets. And then once they've built a list of clients and have a long backlog of data for their AI, they could start eventually expanding into other autonomous vehicles, right? Especially as regulatory doors start opening up for them. The market cap is hovering around just $100 million. If it can just capture a small percentage of the $450 billion market, of which it's an early entrant into, well, that means that the stock could see massive appreciation. Now let's talk about the stock itself in the present day. The stock has and is on a very hot momentum trend right now, and I believe there's a few massive trading opportunities ahead, especially going into Nvidia earnings next month. And I'm going to get right into the strategy to attack the next moves and what I see coming and how to potentially profit off it. But first, a practical tip for you. How do you find this information earlier? Nvidia disclosed they took a stake in the stock last Thursday, and by now it's already run a lot. And if you're just seeing this now, you at least missed out on the first part of the run, right? And that can be frustrating. I believe there's a lot more opportunity ahead, and we'll get into that. But if you want to find these early, you got to be constantly scanning the small cap sector for unusual volume or unusual breakouts. You got to be digging through SEC filings, and specifically for stakes, the 13F holding disclosures. But if you need help tracking these types of catalysts, well, we actually offer that service. Our team offers that service as a part of ZipTrader U. For example, we actually alerted Serve for ZipTrader U members back originally on Friday morning when the stock was trading at just $4.33, and it ran up to $13.89 at highs, which was a run of about 219%. 219% alert price to highs in a couple of trading days. So if you would like our team's help in finding and pointing you to the most tradable potential catalyst every market open day, well, make sure to join ZipTrader U. I'll put a coupon code down below. And if you don't want to join that, you could also do it the other way, which is tracking for unusual volume, tracking SEC filings, reading through potential disclosure dates, and so on and so forth. But we do offer this service for you to make it easier if you're interested. Link down below. ZipTrader U membership includes our step-by-step lessons, our private chat, and our daily morning briefings, which I'm referring to right now. But anyways, that aside, when it comes to new catalyst-driven momentum, in this case, the Nvidia stake disclosure, that energy doesn't last forever, but it can drive a stock pretty damn far. If you go back to Sound, which was another stock that we called out early on, and another one that was catalyzed by Nvidia stake in it, well, it went from around $1.50 to $10.25, nearly a 10x in the span of a month and a half. In comparison, Serve is much smaller cap and a lot more unknown, and the percentage stake that Nvidia has in it is much higher, and that's why I believe Serve has more opportunity ahead. It just has more discoverability potential. It has a lot farther of a market to rally into, and we're early on in the awareness stage where most people still don't really know about Serve. Sound, a lot of people knew about it beforehand, and the overall awareness phase lasted about a month when everybody realized, okay, Nvidia is a believer in this stock. And that's why I believe Serve has more opportunity ahead. And even better if you can get it on a nice sell-off dip. It's in a nice breath cycle right now, and I believe today's nice dip from the uptrend will be bought up aggressively either tomorrow or the next day, providing a huge opportunity. And that's really how momentum works. You get huge uptrends and then a breath and then another huge uptrend and then a breath, and it's that breathing cycle that proves proves to markets that this can get bought up and go higher. And if it fails, it fails. But every time it breathes and gets bought up, the stronger the wave goes and the more exponential the momentum gets. Now, full stop though. Some folks will look at the SoundHound chart and say, wow, SoundHound was a horrible buy. It went down after its run. But you got to remember, folks, as traders, your goal is not to blindly buy and hold stocks. It's to buy early on in momentum, ride the wave upward, and then lock in profits when you get a statistically significant pushback. A 10 to 15% drop, for example, that can trigger a preset stop loss is a good example of a significant pushback. And it's the same thing with Serve stock. If this goes up another 100% or another 1,000% and then dumps 80%, it doesn't matter one bit, because as traders, your goal is simply to ride the momentum and get out. Your goal is not to buy, hold, and get married with the stock and have 15 kids and a house and a white picket fence. No. It's to take the stock, make money from the stock, and then get the hell out of the stock. Now, in terms of current momentum, we are clearly very early on, and either tomorrow or the next day, well, this stock will retain a high level of support and then continue building the overall momentum. And it's upon confirmation of that momentum building that a reasonable play for the next wave upward can be made. But moving forward, what can we expect with the stock in terms of new catalysts? Well, new partnerships, that's one. Any announcement of new partnerships with major food delivery services, retailers, or logistics companies can significantly boost trader confidence and get more investment into the stock. They could also expand existing partnerships. Regulatory approvals and policy changes are going to be big, whether that's obtaining necessary approvals for deploying robots in new cities or opening up to new markets, or any kind of approval that allows more and more customers and faster robots. Market expansion obviously is going to be a big one. Every new city that opens up, huge bullish signal for the stock. Higher adoption rates, more partners and new clients using more and more robotic delivery could drive huge revenue growth. Of course, any improvement in AI software that the media talks about could also drive a lot of interest into the stock, especially because people know that, hey, this is a Nvidia-backed stock. It's also true that Nvidia's earnings reports tend to drive attention to their small cap stakes, and in this case, being a new small cap stake just recently disclosed, I believe the next Nvidia report on August 28th will light a fire under Serve as well. Anyways, folks, that caps off today's video. I hope you found value in it, and let us know what you think about Serve stock down below. Is it a buy? Is it a sell? Should you run around 3 times and then not touch the stock? Well, let us know down below. Anyways, folks, that caps off today's video. Make sure to hit that ravishing like button and subscribe, and we'll see you in the next one.